Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 28th of September. All right, as we start the Friday's trading, it's not surprising that we've seen the US dollar sort of really come back into play here. And it's a bit of a 1, 2, 3 situation. Now, as I was saying yesterday in the FX Market Insight, it can take a little bit of time for the currencies to and fund managers, traders across the globe to work out what's going on with the Fed and what the implications are sort of longer term. Now, to me, as I was saying yesterday, the Fed, it's like the next stage of their policy. So to me, the next level of or bunch of rate hikes for 2019 really signalled a more hawkish central bank, even though it wasn't super aggressive. Obviously, removing the word accommodative out of the statement freaked a few people out, but to me, it was actually just going back to a basically normal operations. Now, so what we've seen is across the board. So we have seen a move down here on a number of the pairs, and I'll explain what I mean by the 1, 2, 3 scenario. So you've got Aussie breaking down, Kiwi, Euro breaking through a couple of levels. Now, the Euro had the benefit of not only going lower on the stronger US dollar, but also there's concerns around the budget, or there's budget issues with Italy. They are delaying the budget talks, and it's just creating a negative sentiment flow-on effect from, even going back as far as their elections. Sterling, it's done a drift lower. Now, depending on what you read, the media will say, oh, it's a bit of fear about Brexit. This is just a strong dollar. And these four pairs, Aussie, Kiwi, Euro and Sterling, correlate. So if the other three are going down, it's going to put downward pressure on Sterling, especially if nothing's happening. There was no Sterling news. There was no Brexit update. So, of course, it's going to drift lower. Dollar CAD rallying with the strong US dollar, although that move was somewhat corrected as Powell late in the day has sort of come back and said, well, we're going to need to raise rates. We don't want to choke the economy, but we've got our work cut out ahead of us. And don't forget, NAFTA is still simmering away there, and that's the uncertainty for Canada. All right, so let me just show you what I mean by the 1, 2, 3 effect. I mean, if you come across to the US dollar, just before I do that, having a look here, you can see where the barroom brawl there, the traction around that trend line. It was always a break above 94.60, which would really trigger the move higher. And now we are seeing the dollar, the true fundamentals shine through. And I think this is obviously the US dollar index has been helped a lot by the uncertainty around the Italian budget. But, this thing's moving against all pairs. And fundamentally, the US dollar is very strong. It's good to see actually dollar yuan, right? This has been such a raw nerve, especially in the Asian market, not really doing too much with the US dollar move. This means the Chinese US trade situation has just been put aside completely at this stage. And now it's just trading a little bit sideways. Of course, there's a little bit of dollar strength, but that was there beforehand, before the Fed. So we'll see how that goes, but it should have less impact as we go forward from here. Now, what are we talking about with the 1, 2, 3 effect? Now, if I come down into the MyFX Trading Hub, okay, the geopolitics are still impacting. I might even actually have to update this because it is a lot less at the moment. It's almost like back to normal trading conditions. The US dollar is in the box seat and driving all the other pairs. It's giving all the other currency pairs direction, especially the ones that were just moving technically with no major fundamental shifts. Now, I'll come back into the upcoming data. The Chinese numbers are going to be very important. But one thing I wanted just to run through was the technical outlook. Now, this is what happens when you do get really good. So we got direction, even though it was quite, calm from the Fed, okay, with regards future rate hikes. They are on the way. Then we also get confirmation with strong US numbers. Okay, and what that does is it takes the US dollar into a very, not just average bullish position, it gives it very clear direction. If you come up here to the summary page of the dollar index, central bank has basically, to me, hawkish. You've got the economic data. Now, we had durable goods and also the final GDP numbers coming in strong. We've got strong economic numbers, and we've also seen, we had that tricky situation yesterday where the technicals were still bearish, even though the fundamentals were bullish. The fundamentals usually lead the technicals. Now the technicals are lined up. We've got a very solid bullish signal, as far as I'm concerned, on the US dollar. Now, if I just come back and just show you what I'm talking about with these US numbers. Okay, so you're having a look here across the board now. We did have, as I said, the sentiment coming from the Fed. Then you have the durable goods now. Durable goods come in massively strong. You come back down here to the final GDP numbers as well, 4.2%, right on par with where they were. So GDP or growth is remaining at those strong levels. And the PCE prices as well, just slightly above. So a little bit of inflation there as well. So that's a 1, 2, 3 kicker on economic data to follow the Fed. And that's where that final move really came from, to give the US dollar that real kick. Okay, so now with a number of these pairs, if I just come back, I just want to show you where things, how they can move very quickly. Now, as I said, the daily analysis snapshot gives you an idea of what's going on. Now, I have explained this before, but just to give you another run through, these top pairs all correlate. Okay, generally correlate the same direction. So if euro goes up and all these pairs are going up, they all do it at the same time. And likewise, the bottom pairs are the same. This is the first time in a while where we do have all these pairs lining up. Okay, Aussie, Kiwi, Euro, all bearish. The US dollar, dollar yen, and dollar Swiss, all bullish. Now, this is very clear, and it comes from because the US dollar is the big fish here, and when it has direction, it drives everything else. So let me just show you here. There's some of these pairs just have a technical perspective because the central banks aren't doing anything and the economic data is not doing anything. Euro is one pair that's doing that. You can see just technically it's bearish on the hourlies and dailies. You come across to the Aussie, it's the same. The Kiwi, also the same. Bank of Japan, just a bullish sentiment being driven by the US dollar. And the Swiss National Bank as well, so dollar Swiss, also very bullish, just on the back of the US dollar. Now, the two odd pairs, okay, sterling, the central bank here, we've got conflicting fundamentals with technicals, and that's why we've got it sideways. Now, sideways, once again, that doesn't mean it doesn't move up or down. It just means that direction is a bit muddled, okay? It's not very clear if it's going up or if it's going down, and that's where you get those sideways signals, and that's very much the same way, the same setup for dollar CAD. Now, funnily enough, the Canadian dollar has got NAFTA hanging over it, and sterling has got Brexit hanging over it. And that's what the geopolitical issues do. They muddle direction. Whereas the other pairs, Euro, Aussie, Kiwi, dollar yen, and dollar Swiss, there's nothing externally really impacting those pairs at the moment, and they are being driven solely by the US dollar. And this is a really good time to be looking to get into your trades if you haven't already. What you're looking to do is if we're in a bullish mode here for the US dollar, you're looking to get in on a dip or breaking higher through levels. All right, so that's where the whole aspect here changes somewhat. Now, just coming back to where your focus is, don't sort of just run in and start trying to get long dollars everywhere in the middle of nowhere. You've got to really plan your entries. Now, some of the entries will be also given a little bit of a push by today's data. Now, we've got some manufacturing numbers out of China. We may start to see some of these numbers drift off as the tariffs kick in. I still think it's probably a month early. I'd say by December, we will start to see a major impact on these numbers. Now, I know the yuan is depreciating, so that may offset some of the tariffs, but we'll see how it plays. It's still worth watching the numbers as they roll out of China. We've got the final GDP numbers out of the UK. Now, these final GDP numbers, they usually are very close to the mark. But don't forget, we've got a bit of a mixed picture here on sterling. We've got very high inflation. The numbers have been coming in strong, economic numbers. So this will be important to fit into that picture. Euro CPI flash estimate. Well, this is going to be really important today, primarily because we've got that negative sentiment in Euro already from the Italian budget scenario, also from the strong dollar. So to me, this is where you get a next best trade is, okay, we've got a pair here that has got very clear direction down. Now, all we need is weak numbers going with that short-term momentum and the changing trend, and this is going to be a really good trading opportunity. Now, that's all we need. We need weak numbers, and that'll really give Euro a real good kick in the guts, and that's where the cash will be on that number. Now, looking at the a different scenario, you look at dollar CAD, where the currency pair is not clear where it's going. We've got geopolitical issues simmering away as well. This is going to be, GDP is an important number, but it's probably going to be overshadowed by all the other crap that's impacting the CAD at the moment. And then we've got the core PCE price index numbers as well. Another good number here. Once again, the US dollar is going topside. We get strong numbers here. It will further reinforce the strong dollar position for traders, and they will run with the dollar yet again. So once again, if we get these two numbers here lining up, okay, so what I'm talking about is the euro and the US dollar numbers. So weak euro flash estimate, CPI, and strong PCE price index, we could see a real solid move here again. The same sort of move we saw yesterday on euro, it could go through again. Now, just for those traders who are reasonably new to what we're talking about, don't forget these Chinese numbers will impact dollar yuan, also the Aussie and Kiwi. We're probably going to give the sterling a bit of a wide berth with that Brexit issue hanging over it. So basically today, this is where your patience through the week. Now, we had, obviously, the Fed was always going to the major thing. We've got clear direction after the Fed. That's when these events really light up and really show us, because we've got direction now. We now know where the data needs to come in, and we make money. That's as simple as that. All right. So that's where we are with those guys. As I said, if you've missed something already, we've got a fair amount of time here to get into play. I'll be updating the next best trade list very shortly, because to me, it's very clear what's going on and where the potential opportunities are. It's around the pairs that have clear direction. Okay. Now, the Fed, or the US dollar at this stage, has got fundamentals and technicals humming for it. The rest of these pairs are technically moving with the dollar, which is great, because that means they will react very closely with the US numbers. And obviously with euro already moving down on another issue, we may see that coming into play as well. All right, guys, it's a pretty good trade session today. If you haven't had a trade all week, or you haven't had a look, today's the day to look in, check in, and really set yourself up. I think we've got really good trading conditions coming around the corner. All right, guys, have a good trade day. We'll see you in the live trade zone. Cheerio.